We've talked about it like almost forever about how flawed a statistic the CPI is when 27% of the index is one question to a sample of homeowners, which is how much do you think your home price, how much do you think you can rent your unit out
Right.
for? And so, that's the owner's equivalent rent in particular is an
Let
ongoing
me,
source of
yeah.
frustration for people like me. But I do think that the overall trend
Okay.
is going to be intact.
David,
Yes.
you own the high ground on this. To review this quickly with a lack of time, because Paul wants to get in. There was a guy named Farrell at Merrill Lynch a few years ago, and he had this young Turk named Rosenberg who owned the slicing and dicing of inflation. If you don't like CPI, what inflation series, David Rosenberg, should we pay attention to?
Well, what's interesting is that in December, I think it was Governor Waller had said that the Fed was increasingly shifting its focus from the government data towards what business contacts were telling them. And we're going to get the beige book tomorrow, and the last couple of beige books have said decisively that the corporate sector is seeing diminished pricing power. The ability to pass on cost increases has gone down materially. So I think you have to, I mean, so much of the CPI, even the PCE deflator, are imputed guesswork. They're imputed pricing in the service sector. So I'd say turn your attention to the things you can see, touch, and feel in the product sector. And when people say to me, well, but all the disinflation's been in the goods sector, well, those are the prices you can actually have reliability on as opposed to imputed services. My big concern is that it's the service sector that the Fed is most focused on, and that is the most unreliable components you have within the CPI and PC deflator. So I say look at the prices of the things you can see, touch, and feel, and they're actually in a deflationary momentum, and I expect that will persist over the next year.
So, David, this is a good week to be an economist. Lots of economic data coming out this week, including we're going to hear from Fed Chairman Jay Powell. Do you expect the chairman to, I don't know, try to walk back a little bit some of the December commentary? It seems like the economic data is supporting just kind of waiting here on rate cuts.
Well, firstly, it's always a great time to be an economist. This week's no exception. We just have to fasten our seatbelt and stay at our desk 24/7. Look, the Fed has already walked back that dovishness in December. The markets leapt on some, comment that I think Mary Daly made about that maybe March would be the date. And of course, then the futures price in, 6 rate cuts, not 3. The Fed has successfully calibrated the market back to where it was in December. I expect that I think he's going to be pretty hawkish. And everybody is lined up hawkish relative to where they were in December. And the question is going to be, will he sound more or less hawkish than what's priced in right now? My big concern, actually, and this is coming from a bond bull and who would be ordinarily a dove on the Fed, I think he's going to sound pretty hawkish tomorrow.
How about we're going to get some data here. I mean, again, a big data week here. You got the payrolls on Friday. I mean, that's kind of one of the issues for this market is the labor market's been very strong here.
Well, look, if you bow down to the holy grail of non-farm payrolls, that's what you would believe. And of course, that's all the Fed focuses on is non-farm payrolls. And I've almost given up trying to forecast the number because last year, half of the growth in non-farm payrolls didn't even come from the survey. It came from the
Right.
birth-death model, what we used to call the plug factor. But frankly, if you looked at the household survey, and especially the contraction in full-time jobs over the past 6 months,
Yeah.
I mean, we're replacing full-time jobs with part-time jobs. There's been practically no growth in the household survey over the course of the past half year. If you look at the household
Right.
survey, you'd be thinking this recession is
Right.
probably staring us in the face. The other thing I would just mention is this: look at the divergence between the non-farm payroll headlines and the work week. The work week is already back at recession levels. So I know I hear this all the time, the employment numbers, the robust economy, but actually, when you dig beneath the veneer, even of the beloved payroll survey,
Right.
and you look at the hours worked, it's telling you something a little more insidious about what's happening in the labor market than what the current consensus narrative is.